Welcome to the Monday Mortgage Series. Today we're talking about temporary buy-downs, how to temporarily buy down mortgage interest rates when you're buying or selling a home. I'm Ann Turnberg with the Turnberg Swallow Team at Coldwell Banker. I'm joined by Loan Officer Louise Larocque from Fairway Independent Mortgage Corporation. Welcome, Louise.
Thank you.
Question for you. Let's start with the basics. What is a temporary buy down?
So the temporary buy down is a really nice product that we work with for buyers who want to purchase a certain price range of home, but that initial payment is just a little higher than their comfort zone. And they know that within a year or two that they will move into gradually accepting that payment as something that's much more comfortable for them.
What are situations in which a buyer and seller might agree to a temporary buy down?
So the way we structure the buy down is that there is a cost for every month where the buyer is paying the interest rate lower than the going rate. So let's do an example. If the normal interest rate is 6.5%, a 2-1 buy down would start them at a 4.5% rate. And then the payment difference between 6.5 and 4.5, let's say it's $200 a month. You multiply that times 12 months, and that's the initial cost for that one buy down. The next year, they would be at 5.5%. So the difference between the 6.5 and 5.5 payment times 12 months would be the second cost. You add those two together, and that's the quote cost of the temporary buy down. So we're able to start your buyer's loan at 4.5 and a much more manageable payment for them. And every month for 12 months, that's their payment. And then the next year, it'll automatically go to the 5.5. That money's already set aside to go toward the difference in the payment. And then the final year, year 3, they'd be back to the 6.5, which is their going rate. And by then, whether it's overtime, whether it's a person who went back to work, whatever that extra income is, might actually supplement their comfort level.
So, what are the buyer's pros and cons of doing a temporary buy down?
So the pros are that we can have someone move into a home today with today's prices and make that payment comfortable when they know that in the next couple of years their payments are going to increase, but they've already talked about and thought about how they're going to pay that extra amount. And the seller doesn't mind because they know exactly what their net payment is when the offer's made and they make their closing cost credit. So the seller's getting a buyer in a home that they love, and it's a happy transaction.
Temporary buy downs can be a great tool for easing into your mortgage, freeing up cash for home improvements and other priorities. If you're in the process of researching mortgage options, reach out to myself or Louise to deep dive into options. Download Fairway's temporary buy down flyer to learn more. Find the link in the description. Thank you for joining us for Mortgage Monday. We'll see you soon.